All right. So hello all. Great to be here with you. And this is our weekly webinar for TradeNet. And today actually what I want to do is to go over a little bit to take a look on special trades we took through Black Friday and Cyber Monday trades, and just to understand what are these special trades. And it's not so special actually if you know how to do them, and the market brings us such opportunities from time to time. So we're going to discuss a little bit what is a proper strategy, what are the modules that are actually comprised a good strategy, and how to find the correct ones. Also, you know, the oil market, the nosedive in the oil market last Friday. So we want to see who benefited from the plunge in the oil market, and who are the losers from the plunge in the oil market. So there are a couple of great ideas and great insights we are going to discuss. And finally, as we are doing from time to time, December, we want to get prepared for December, and I want to show you our statistical figures regarding December. What usually December is up to. Do we see usually December with gains? Should we expect as traders for gains, or is it a month, you know, to get short all over? So this is something we are doing every month, and right now at the start of the month, this is something we wanted to discuss. So let's start with the Black Friday and Cyber Monday trade. So you know that the Black Friday is the Friday following Thanksgiving Day in the United States. Always, it's actually the fourth Thursday of November, and actually since early 2000, it has been regarded as the beginning of the Christmas shopping season, or you know, the shopping season madness in the United States. And most major retailers open very early and offer promotional sales. Now, Black Friday today is not a public holiday, and this is actually why on Friday we saw the market operating as usual, aside of the fact that it was only it was just trading for half of a day. But actually, you know that in California and some other states observe the day after Thanksgiving as a holiday for state government employees. Thanksgiving and the day after off, followed by a weekend, and thereby increasing the number of potential shoppers, and it has routinely been the busiest shopping day for the year. Now, why is that? Why should that attract us to make some tradings? Or, you know, if we know that Black Friday is going to be a slow day because it's only half of a day in the trading day, as a trading day, where should we, or where can we find opportunities in this day? So, you know, when we think of what is a good strategy I think is comprised of three modules. I'll start with the third module. The third module is, after I get my feet into the trade, what should I do? How am I going to manage my risk? How am I going to manage my trade? Where am I going to take partial profits? Am I going to scale out? Am I going to take all the profit at once? This is something that should be very, very sound in your trading plan. It should be very, very precise. I think that when we are trading, we are drunk. We have lots of emotions that are flowing. We can't actually, you know, think clearly, and think clear. And this is exactly why you should have a very sound plan. But this is not our lesson about. This is something that it can be learned, and we are teaching. Part of it we are teaching in the Top Trader class. Now, the second part, the second module of a very good and very sound strategy is actually the tactic. What is the core idea of the tactic? We need to backtest every tactic in order to see that the idea is also working and to see figures black on white what the tactic is up to. And then after we decide that the tactic is working for us, then to decide exactly what are the conditions that that when they are met, we can pull the trigger and we can get into a trade. This is the second module. Also, this is not part of the things we are going to do today in this webinar. The first module, and one of the most important module, is, after I have a tactic and I know where to enter, after I know exactly how to exit the trade, what is my exit plan, then I need to search for stocks. I need to have the best stocks on my screen, because if I have a great tactic, if I know exactly how to manage my risk and where to take profits, if I don't have gold on my screens, I'm not going to make gold out of it. I have to see the money running on my screen before I can pull money from the market. So I must have the best trades, the best vehicles on my screen in order to squeeze the best profit I can have, and this is what we are going to do today. Now, part of you are already members of us in our Facebook and in our Facebook page, and actually I'd like to welcome you all to our Facebook page. You can just search for Shlomo Cooper Trading, and we are putting there daily posts directed specially for day traders. We are every day I'm posting there a very short post about how to get prepared for the following day, what are the best the best interests for traders in the upcoming trading day, and the hot stocks. Which stocks should we put our screens? Which stocks should attract the most action in the upcoming session? Also, you're going to find in this Facebook live trading videos, educational videos, trading ideas, weekly technical analysis. There are traders discussions there. You will see you will see the real trading posts. So there are a lot of information, especially for you as traders, and we are more than actually. I'd like to urge you to come to this page, and let's have a look into it, and how can I choose the best stocks for Black Friday or some Cyber Monday trades. So this is the Facebook page, all right, and you can all see it right now. Okay, so it's facebook.com/shlomo.trading, and this is part of the posts and information we are going to share with you through this page. For example, today, every week, we are running here a technical analysis of the S&P 500, and if I'm going downwards, you are going to see here the chart of the S&P 500. Also, I have here weekly stock picks every day, two picks that I'm choosing especially for you, with a quick summary of what happened during the last week. As you also can see, and actually we have just celebrated the first 100 likes on this page. So if you can come to this page and you can just click on the like, we can just reach the next milestone of 200 likes. We had here a couple of advices how to survive the Black Friday craziness, and every day, and this is, I consider it the best thing. Every day we have here a post directly for day traders, which contains the hot stocks list. So, for example, here on November 28th, ahead of the start, actually it's hours ahead of the start of the real action in Wall Street, we post this this message to you on this page, and you can see here that on the hot stocks list we mentioned that we are going to follow all the retail stocks on the background of the Black Friday. and TJX is one of them, JWNNKE, Urban Outfitters, URBN, ANF, Under Armour, which is AUA, Apple, of course, Amazon, Best Buy, BBY, TGT, Tiffany. Now, let's just take a look on a couple of these names and understand what did these trades do. Now, one of the best thing in Facebook that you have an archive for everything. So you can just scroll down on this page and to see what kind of traits, what traits and what names were on our lists in recent days, and just to pull your charts and to see, and you will be able to understand how nice this, how nice the price action is working on this trade. So you actually can know ahead of the start which stocks are going to bring you money. Now, this is not the tactic, all right, because you will have to use a very proper tactic, a very fine tactic. You will need to bring into your trading the exit strategy. But for the start, you have the first module of a very good strategy, which is to put the best possible traits, the best possible actions on your screen. So let's just put a couple of them, and let's look on TJX for November the 28th of November. So here I'm going to put TJX, and of course all these trades are coming from the retailers. Let's go to the 28th. Just see what a great price action. TJX started here around 64.80, and from there it didn't look behind. It just went on and on and on. And I'm not going to show you how to trade it, and part of you know exactly what is our tactic and how to enter it and how to exit it. But for start, you have here a stock that started at 64.80 and didn't actually have one red bar till 66.40. All right, that makes a whole movement of $1.80. Let's look further. Let's take, for example, Macy's M. All right, Macy's. You all know Macy's from the retailers. All right, started at 64.20, went up and up and up, didn't look behind till 65.60. All right, so here you have something like $1.60 before think about stalling. Let's take, for example, Tiffany. All right, Tiffany, the jewelry company. Let's see what Tiffany made on that day, TIF, and they are all hours ahead of the start on our Facebook page. Tiffany started the day around 106.50, and from there it just shot up till 108. And by the way, after the first action, as you can see, it reached the high of the day, and from there it just went sideways. So this is the best stocks I want to have on my screen as a trader in order to know that I'm going to have a fine day on Wall Street. Now, you are going to see here posts of real trades, right? And I'm just scrolling down a little bit to show you. So these trades, for example, are coming specifically from the trades that we posted ahead of the start in the hot lists, in the hot stocks list. And let's look today, and let's move today, for example, to the Cyber Monday. So of course that when it comes to Cyber Monday, again, we want to focus on the retailers, especially, on the online retailers, because actually Cyber Monday is a marketing term for the Monday after the Thanksgiving holiday in the United States. And the term actually Cyber Monday was created by marketing companies to pursue people to shop online. And today they say that 77% of online retailers make their sales increased substantially on the Monday after Thanksgiving, and this is a trend that is driving serious online discounts and promotions on Cyber Monday every year. Now, of course, we don't know if the stock is going to go up or to go down. This is why we need tactics. We need to follow the direction. We need to follow the price action in order to have sense where the stock is going to move. But after we have the stock, all right, we can just see, is it going to move up or is it going to move down? So let's go today, and a couple of stocks I put today on my screen were, for example, Best Buy, BBY, all right? BBY is a big retailer. It was one of the stock in our momentum list because it made a very, very sharp gain. It had sharp gain on Friday, and today I just prepared to I was prepared to trade it. Of course, I didn't know, is it going to go up, is it going to go down. Everything actually was dependent on the early figures we are going to get from the Thanksgiving Day and from the Cyber Monday sales. All right, so as you can see, BBY started the day with a gap down. It had here a really sharp decline at the start. So right now I understand that the direction is definitely down. That means I need to find a good place to short this trend, because usually if we have such a good trend to the downside, it doesn't halt just at the first low. Usually after the first correction, it can continue to find lower points. So here I just followed the pullback, the retracement, and as you can see, I always examine how the retracement is being done. Is it with wide range bars? Do we have here a lot of volumes, a lot of motivation of the buyers? Is this really a good bargain to buy here stocks, or is it just maybe a profit taking of the short sellers that actually had a great run here, and they just want to cover a part of the shorts before they are going to let the stock getting down back again. So as you can see, the stock the stock actually found its a ground here, but it just went up step by step, in inch by inch, actually very narrow range bars, until it got here just below the VWAP, the declining VWAP. Now when you see such a narrow bar, actually I call this bar NR7. NR7 is the narrowest bar in the last 7 bars. This is a very good signal to get short on a stock like this. Actually, the narrow range bars gives you a signal that the last movement is about to stall and the stock is going to get back to the main direction, to the main trend, which is a downtrend today. So what I like about the NRB trades, about the NRB candles, the narrow range bars candles, is that you are risking very little. For example, if we are going to examine this bar, the high of this bar is 37.75, the low of this bar is 37.69. So you are getting here a trade of 6 cents only. Now, of course, I'm not going to put the stop 1 cent above the high of this bar. If I have here the declining VWAP, usually I'm going to put the stop a couple of cents above the VWAP. So for example, on this trade, my stop actually was 37.79 and my trigger point was 37.69, just below the low of the NRB, which gives us a trade of 10 cents. This is all I'm risking on this trade, 10 cents. From here, as you can see, the trade went down. Actually, not just it moved to back to the bottom, it actually made a new low of the day, and by 11 o'clock New York time, it made a new low at 36.86. So from 37.69, we had here a fine $1 decline for risking only 10 cents. That makes it risk to reward 10 to 1, which is a great deal, a great trade, and this is exactly what we should look for as day traders. If I can have a 10 to 1 trade, and of course I will never know to get out of this trade exactly here at the bottom. I'm going to scale down, and there are a couple of tactics, very good tactics by the way, how to manage such a trade. And I can also tell you that pay attention that this movement actually ends with another narrow range bars, another NRB, and NRB is always a bar that is going to stall the recent direction, and it's going to reverse the direction, not to reverse the trend. The trend here is very clear. It's a downtrend, but it's going just to stall the last direction, which is a down direction. All right, the last movement. It's going to stall the last movement. So this is also a bar. Not just it's going to initiate a trade. This bar can also stop my trade. Can also tell me where to get out. And for 10 to 1, this is a great trade. Now I want to show you another Cyber Monday trade I took today, which is Amazon, and actually I'm still shorting 100 shares on Amazon, as you can see here, and right now I have just a little bit one grand. So let's see what happened with Amazon. And of course, Amazon appeared on our Facebook trade in the hot list stock. This is and it's a legitimate candidate for the Cyber Monday trade. And again, we don't know ahead of the start. Is Amazon going to go up today? Is it going to get hammered today? Of course, we don't know that. This is why we are not just clicking on the mouse at the start of the day. We need to see facts. We need to see numbers. We are not trading just at the open. We need to see some information, some candles before having any insights. What is the direction of the trade? Should I get a long position on that, or should I get a short position on that? Of course, at the start of the day, as we can see, Amazon, right, this is a green bar, but it doesn't have a follow through, and from that it just going down and going down sharply. Now we had here a very sharp decline. This is a bar I call WRB, which is the short term for wide range bar. All right, just the opposite of the NRB, which stands for the narrow range bar. And just after this bar, we can see a very tiny bar. Now, this is exactly the formation that we call in the technical analysis bear flag. All right, bear flag. So we can see just the consolidation at the bottom of the bar. So there are no bargain hunters at the bottom. Nobody wants to buy Amazon. Nobody is going to bet on Amazon. But there are no short sellers, or there are not investors that are willing to push Amazon lower. So, and this is exactly what is going behind the scenes of the bear flag, the bear flag formation. The formation, actually, the technical formation is actually the setup is telling us when the low of the day is breaking down. This is exactly where we want to get on this trade. Here it's just below $334, and we are going to put the stop a couple of cents above the high of this bar. All right, and again, I'm going to risk, I don't like to risk more than 1 bar, 2 bars at the maximum. So the high of this bar, as we can see, is 334.91. Now, one of the thing I'm seeing with novice traders, with traders that this is the first or second year in trading, is that they are just stopping out for a couple of cents because they didn't place the stop correctly, just to see the stock going exactly at their desired direction, but they are not in the trade. They are already got shaken out of the trade. So this is very important to understand how to place a stop. And when I see that the high of the bar is 334.91, couple of cents below the round number, and there is, a tremendous significance of the round number when it comes to trading Wall Street stocks, I'm going to put the stop couple of cents above the round number. That means $335. And if you are going to play this game correctly, you will see that paying attention for that issue is going to save you lots of trades. So I put the stop here at 335.10, couple of cents above the round number. So now, as you can see, the stock went down, and my trade got triggered, and I'm in. But the next bar actually went up, and I want you to see what was the high of this bar. Can you see it? The high of this bar is 335. That means that if I put my stop above the high of this bar, 334.91, I would got out. But because I placed the stop correctly, there was a ceiling at the round number, 335. So this actually saved me the trade. Now, it doesn't just save me the trade. It doesn't just prevented me to get out of Amazon with a loss, but it actually translated this trade to be a $1,000 gainer. It just went away, and as you can see, it just pushed lower and lower, and there was a lot of pressure on the low of the day, and then it just broke down, and from here it just went down very, very nicely. And as you can, I took here 400 stocks. Most of them I scaled out along this movement, and now I'm with my last 100. And from now on, I'm just going to manage my trade, and that means I'm just going to lower my stop on the last 100 as long as it's going to trend lower. So my stop right now is at 330.30. And again, the last 100 actually is the best one, because on 300 I made $640, and as you can see on the 100 I made 488. So most of my money actually came from the tiny part, not from the large size, not from the large portion of the trade. And this is a very profound concept when it comes to trading, and maybe we'll have another time to talk about that. Now, I want to move on, and I'll just stop here to see if there are any questions. Regarding what we did. All right. So Joy is telling us he stopped out on Amazon at 334.98. Ouch! It's just 2 cents below the round number. Exactly why I'm telling you to put the stop correctly, to place the stop correctly, even if it's going to cost me a couple of cents. If it's going to be a little bit more expensive for me in terms of cents. And actually, if I'm paying more cents for the stop, I can just reduce the size, and this is exactly what I'm doing. All right, so let's move on, and all right, and that let's talk a little bit about the oil. And while the US stock market last week continued to plow higher, and actually, if you are going to take a look at the performance of the market, We can see that the S&P 500 finished last week with a little bit of a gain, but actually it was, the sixth weekly gain in a row. So this is something very, very interesting. This is something unusual to see. From the start of the year, actually, it's up 12%, and from the start of the quarter, it's up 5%. The Nasdaq, by the way, is one of the best index in the United States, up nearly 21% from the start of the year. But the oil was the biggest biggest noise, and made the biggest noise in Wall Street last week. And as we know, the crude oil fell another 13% last week, or only on Friday it went down almost 10% after OPEC met on Thursday in Vienna and decided not to cut supply. Now, many are of the opinion that OPEC's recent actions are meant to hurt the US oil industry, and specifically the shale industry, which they correctly perceive as a long-term threat for them, for their business. Since it can cost something between $60 to $80 per barrel to produce shale oil, many shale companies can't operate profitably if the price drops below these levels. Hence the crash we have seen for many energy stocks lately. Now, OPEC countries also experience significant problems as the price of oil drops, and the big question now is how much near-term pain they will be willing to take in order to really hurt the US oil industry. Longer term, the US is in a position at this point where it can actually meet domestic energy demand with no imports outside North America at all if it wanted to, and with better technology to extract domestically, OPEC is playing a loser's game. We have to understand it. And at any rate, here's on the chart a 1-year chart of the price of the oil, and as we can see, it has been straight down since July, with no end in sight at the moment. The S&P energy sector, we can see it here on the small picture. Right now, it tried to bottom down around October, but Friday's action and also today the energy is going down, actually has left it at new lows as well, and we can't see here bottom. Right now. So far, the pain in the stock market has been somehow isolated to just the energy sector, and sectors that benefit from a drop in oil prices have been surging, like the airliners. And I played the airliners today, also on Friday, and this is something to put on your screen, like AAL, American Airlines, like United Continental, UAL, like Virgin America, VA, it's a recent IPO. As you can see, as shown on this chart, the average energy sector stock in the S&P 1,500, right? This is a much wider domain stocks than the only S&P 500 that we all know, is down a whopping 37% from its 52 weeks high. Now, the average non-energy sector stock is just 10.25% from its 52-week high. For all stock, the average here is down almost 12% from its 52-week high. So the energy sector's pain adds only 1.75% from the non-energy reading. The table here to the left shows the S&P 1,500 energy sector stocks that are currently the farthest below the 52-week highs. And today alone, there are many stocks in the sector down 15 and 20%, not today, but on Friday. And actually, when I saw, the plunge in the energy sector, in the energy space, it just took me, it just brought me all sorts of images, all sorts of memories, similar to the crash we saw in the financial and tech sectors when they really broke down. In 2008 it was the financial sector, and in 2000 it was the technology sector after the burst of the dot-com bubble. For those two sectors, though, the impact to the overall economy was a net negative, and so far investors are treating the drop in energy as a boon for the economy, or at the most a break even. And when we are all going to put gas into our machines, into our cars, it costs less. That means we are left with more money to spend. Otherwise, we feel a little bit more rich, and this is of course a good thing for the economy. Let's move on, and here on the chart, I wanted to examine two quick charts that show the recent divergence between energy names and certain consumer and transportation names as the price of oil has collapsed. The first here to the left shows the year-to-date performance of the S&P 500 energy and consumer discretionary sectors. We have the energy on the red line and the consumer discretionary on the green line. While the second to the left, the second chart is showing us the year-to-date performance of the S&P 1,500 oil drillers and airline groups. The airline here is the green chart, the green line, and the red one is the oil drillers. Now, take a look at the divergence seen recently in each of the charts, and this is actually amazing. Energy was outperforming, as you can see. The red line of the energy is above the consumer discretionary, was outperforming consumer discretionary by a wide margin earlier this year, actually up until June. But that trend has completely flipped on its head over the last 2 months. The airlines obviously see huge benefits as the price of oil falls, and the group is now up almost 83%. This is the green line we see here. The oil drillers on the other side, on the other hand, are now down almost 41% year to date without a floor in sight. This is just amazing to see it. Now, we can see the impact the impact oil has had on country stock markets. And here on this chart, actually, I put here a chart showing the year-to-date performance of Saudi Arabia's Tada'ul All Share Index. This is the red. This is the stocks exchange of Saudi Arabia, and versus the S&P 500 below. This is the green chart. As we can see, Saudi Arabia was one of the best performing countries in the world just a few months ago, up until August. But now it's up just 6% year to date. Actually, it fell below the performance of the S&P 500 because the S&P 500 has slowly and steadily ticked up to a 12% year to date gain. I want to finish this presentation with something we are doing every month here in the room in order to prepare our traders for the upcoming month. And here we are early in December, the first trading day of December. So this is exactly the correct and the right place to do it. So November is now in the books, and we know that November went up, and this is our statistical table that gives us a statistical overview of what the Dow Jones has made during different time frames in the past. So if we just take November, for example, as we can see, November actually delivered gains for the investors in any time frame we analyzed. In the last 100 years, 0.71%. In the last 50 years, on average, more than 1%. And over the last 20 years, it actually made sharp gains, over 2%, with 65% success ratio. And actually, this time, it made 2.4%. So, and you know, we are not going to be correct always, 100% of the time, because this is just statistics, but this is what make it this is the best thing about it, because the statistics it doesn't make a mistake. All right, it doesn't make a mistake. These are just mathematical figures. So that means that if you are going to stick to this table, to the statistical figures, you are going to be right most of the time. And this is exactly what we want as traders to be. We want to be on the right side most of the time, and to know how to minimize the risk when I find myself on the wrong side of the map. So let's get to December and understand what December is going, what December has in its cards. So as shown, the market has historically been consistently positive in December. Over the last 100 years, the Dow has averaged a gain of 1.47% in December, with positive returns 75% of the time. This is huge. Just to understand, this is huge numbers. Over the last 50 years, we are talking about an average December gain of 1.6% with positive returns of 69%. And just look what we have in the last 20 years. In the last 20 years, 1.5% gain with positive returns 75% of the time. So, you know, usually December is considered to be one of the best months of the year. You know, most of the traders and most of the investors actually are very, very worried about the fact that here we are getting to December with 12% gains, and this is on the shoulders of the previous year's gain of 30%. So, you know, maybe the last month of the year, it just got out of steam. It has nothing to, it doesn't have any power, any energy has not left for the market to go higher. But, you know, another analysis I made actually shows very, very clearly that this concept is totally wrong. And the mathematics show that usually when we are getting to December with a double-digit performance for the market, that means more than 10% gain from the start of the year, December tends to be better than years with performance less than double-digit. Alright, guys, so here we are going to end this presentation. Thank you very, very much for listening, for being part of this great community. You know, all of these webinars are made to bring you more fresh information, to give you insights, to show you, you know, things that usually traders are not thinking about. Usually this is stuff that the professional traders are actually trained to watch and to learn and to deal with, and this is just our way, you know, to try to give you back. And of course, I'd like to see you all in our Facebook page. This is a fast community. This is a fast growing community, and this page is, you know, the community that we are doing it together, and the success of this community depends on everyone here. So thank you very much for being here with me, and I wish you all a great success in later in this trading day. Bye bye.